Yeah, greetings everyone. This is Obi Namadabuchi speaking. You can call me Obi-Wan, your finance coach. Yes, we are into financial advisory, accounting, and tax advisory. Okay, so basically, financial advisory, giving you some financial advisory as regards some energy stocks earlier this month, and also some international stocks like Nvidia, JP Morgan and Chase, okay, and the likes. Okay, but there's a new development in the financial market in Nigeria. There will be more developments in Nigeria here due to the new capital requirements by Central Bank of Nigeria. So the Central Bank of Nigeria has raised the bar for commercial banks, and on the basis of the fact that there's floating of the naira, so the exchange rate in Nigeria is actually depreciated, and there's need for banks to actually show up their capital base to meet up with big ticket projects and also to also achieve the $1 trillion economy of the federal government of Nigeria. Okay, so Fidelity Bank have taken a bold step to raise fresh funds. This is a big challenge, not that easy because interest rates are high in Nigeria currently. So fixed income market is really booming. Okay, but equity market is also doing well, but not at fixed income. So in the midst of high interest rate environment, banks still need to raise new capital for their business. They still need to raise it. And when there's high interest rates, it has implication on equity in terms of consumer income and the profit of banks and profit of organization. However, it could be more revenue for banks in a way. But how about the issue of bad loans? Okay, so these are the analysis we've done to see, if this particular bank will be a good buy. Yeah, for my own analysis, Fidelity Bank, it's a buy for me. So, and I'll give you the analysis what I saw. Make sure you do your own analysis, do your own research before you invest in any company. We are doing based on information available to us. However, there are also other non-qualitative analyses that affect decision making, like the quality of the board of directors and the management, the other parts of the non-financial analysis. But the impact will be on the financials eventually. So that's our caveat there. So now let's look at the requirements of the central bank, as I said earlier on. Now, the Central Bank of Nigeria earlier this year, March, has given new capital requirements for banks. What was the previous capital base for Nigerian banks? What's the new one? So Nigerian banks categorize either your commercial bank, merchant bank, or a non-interest bank. Okay, so for commercial banks, it could be either an international bank or a national bank or a regional bank. So if you are an international bank, now the previous capital base was 50 billion naira. With that, you are good to go as an international bank. But now you need to hit 500 billion naira. So the big banks like Zenith Bank, Fidelity Bank, First Bank, FCMB, GT Bank, UBA, they are basically within this international bank, Access Bank. Okay, so they are a good one. I've mentioned First Bank. So they are here. Okay, so we also have the national banks. We have the national bank, we also have the regional banks. Okay, the regional bank like parallel banks and the signature bank, the Union Bank. These are regional banks. So for the national bank, if you have 25 billion before, you have to increase your capital base to 400 billion here in Nigeria. And for regional banks, if it's were to be 10 billion, you have to increase the capital base to 50 billion. If for regional bank. So like in regional bank, are those in one part of the country, probably the western region, the eastern region, the northern region, northeast, north, southwest, just a region. That's where your clientele base or customer base. National banks are those that operate, nationally, all part of Nigeria. So that's the meaning of that. So we have the merchant bank. We have if you have 15 billion, previously it was 15 billion from merchant bank, but now 50 billion. We have the non-interest bank, national non-interest bank from 10 billion to 20 billion. Original non-interest bank from 5 billion to 10 billion. Okay, just double for that. Okay, so those are the requirements that banks are going to run with within this year and next year, that's 2024, 2025. Okay, a lot of them are taking action to meet this requirement, and there are some kind of conditions as well that this is what constitutes your capital base. So this has also generated a lot of argument, but banks will need to also, tighten their seatbelt to achieve this. So that's why I said that Nigeria capital markets there will be activity this year and next year. There will be lots of activity, especially from the banking sector. So if you want to key in early enough, it's good to position yourself, look for the good ones amongst them, and key in, buy their shares early enough. If you've done analysis well, or yeah, most of analysis has been very good since the beginning of this year. That we're making recommendation. We made recommendation for Nvidia, okay, and we've made other recommendations in the international stock exchange market that are actually doing very well. So the fact that our success rate is very high, but of course we also give professional qualification that other factors affect analysis, and that's the simple truth. Okay, that's the simple truth. So other factors. So based on the publicly available information, that's what we use for analysis. Okay, so we look at the fundamental. Good, good, good. Let's look at Fidelity Bank. Fidelity Bank have taken the first step out of the first mover advantage, to achieve its own minimum capital base, and the bank wants to raise 127.1 billion naira. Okay, and they want to raise it using two approach, to kind of methods, through right issues and through public offer. Right issue is just issue to existing shareholders. Okay, they give you, if you have existing like 10 shares before, I'll give you extra one share at this right. So this right issue is at 9 naira 25 kobo. So they want to raise 29.6 billion naira in right issue, and they'll raise 97.5 billion naira public offer at 9 naira 75 kobo. So whether this price is a fair price or not, we'll also see as we do the analysis. Okay, so yeah, so the two will give you 127.1 billion. So that is the aim of the bank. Okay, so let's look at the analysis. And don't forget, these analysis are aimed at you taking advantage of investment opportunity. When you listen to this video, don't just limit yourself to, just listening, understand it, but take position. The aim of this analysis is to make your passive, to make you earn passive income. If you have savings, you have some free cash flow, that are idle in your savings account, okay, that are free in your current account, for instance. Okay, so we help you design a portfolio that will make your cash work for you. So at the end of the year, you make a good return more than inflation rate. Inflation rate in Nigeria is about 33.69%. So, you need to complement your active income, the one you earn from your day-to-day, month 9 to 5, with passive income, so that you have a balanced portfolio. Yeah, you should have a balance. So, and take note, this investment is not only for those that, even though you don't have more, you can also start small. You don't have to have 1 million, 2 million before contact us to help you, create a good portfolio for you. As low as 100,000, 50,000, you can start. You can start. At least start gradually. Okay, so let's go back to our analysis of Fidelity Bank. So I've done this analysis of Fidelity Bank here, and I look at the earnings per share, I look at the dividend per share. I also looked at the gross earning and the profits of the bank. I looked at the dividend yield. I looked at the payout ratio, and I look at the cash and cash equivalent at the end of the year. I also looked at the cash net increase in cash and cash equivalent. Then I look at the share price volatility, how it has increased over the period, and the annual changes in the share price. So I look at the total assets of the bank, liability, and the equity of the banks. I also looked at I did some fair valuation of the bank. Okay, so these are what I did, and mainly looking at the key fundamentals of the financial. Mainly as chartered accountants, what we check are basically the financials. But we can also check the non-financials. Non-financials are also excellent. Okay, yeah, they're also very good for analysis. So, or at the end of the day, your non-financial will impact your financial. If you have a bad management, you will see it in your financials. So the financials are the lagging measure, the non-financial are the leading measure. Okay, so based on the earnings per share, we see what I see is that the earnings per share has been on the increase from 2020 to 2021. So I look at 4 points from 2020, 2021, 2022, and 2023. So the earnings per share has been on the increase. It was 92 kobo in 2020, 1 naira 23 kobo in 2021, 1 naira 61 kobo in 2022, and 3 naira 31, 11 kobo in 2023. So each share of investors, if each investment you have in Fidelity Bank now is giving you more earnings, is giving you more returns, which is good. So I feel this is good. So I give it a good, I give it good, yeah. Okay, so it's a good for me. It's good, it's good, it's good for me. So it's just good for me. So this green for me is good. So I also look at the dividend per share. The dividend per share tells you how much investor will get as dividend. Dividend is what you receive, what you will receive at the end of the year. Okay, so for each share, it has also been on the increase. So based on our forecast, we believe these increments will continue up to 2024, 2025, 2026. So that's our forecast. Look at earnings, we're forecasting increase in earnings as well. So if you do your regression analysis and you do your forecasting, bring out your forecasting too. So you also align with my own forecast in a way, you could say. Now, so looking at the dividend per share, 22 kobo per share 2020, 35 kobo per share 2021, 50 kobo per share 2022, 85 kobo per share 2023. So also on the increase. So this is good one for me. This is good, this is good, this is good, this is good, this is good for me. So they are giving more dividend each year. You get more money each year. It's your shares in Fidelity Bank. So we also looked at the gross earnings. How much are they making as gross earnings, interest earning, commission, and all their earnings? It has also been on the increase. 2020 was 206.2 billion naira, 250.7 billion naira in 2021, 337.05 billion naira in 2022, and 555.8 billion in 2023. So good for Fidelity Bank. Also in the increase, their profit for the year, 26, this after deduction, after tax, after everything, 26.6 billion in 2020, 35.5 billion in 2021, 46.7 billion in 2022, 99.5 billion in 2023. Very good for Fidelity Bank. 2023 was actually good because that exchange rate fluctuation favored a lot of banks. So from my review, a lot of banks did that in 2023 in terms of their top line and bottom line. So this earnings and profits is good. So this means their financial performance is good. Financial performance is good. So in terms of the current financial performance, recent financial performance is good. So in terms of their dividend, I gave dividend neutral. Neutral. Why? Because dividend yield, that means that the percentage of dividend to the market price per share. The market price per share is just the amount you bought, the amount you paid to buy a share, and not compare it with the dividend you got from those shares. So it increased. It's 8.7% 2020, 13% in 2020, 13.73% 2021. It now fell in 2022. It fell further in 2023. So now, why I give it neutral, I don't give it bad because this yield is still above yield in the banking industry, a lot of banks, is still above, even at 7.8%. The yield is still very good. So, but the fact that it fell is what I really don't like. So that I gave it a try, not give it back. The payout ratio increased a bit, it now fell again in 2023. I gave it neutral because it's still not bad in the banking industry. So we also have the cash and cash equivalents at the end of the year. Their cash position is also, it increased, it fell. It fell from 2020 to 2021. And also the changes in cash flow, they have a negative cash flow in 2021. That's after the year after COVID, it really affected them as well. So they have negative cash flow. For 2022, they picked up, they have positive cash flow. Then 2023, they still have positive cash flow, but it fell in terms of their cash inflows. Okay, it fell, but it's not negative. Okay, so but their cash position at the end of the year increased. So I gave it neutral because it's not, like those other measures that was very strict. Then their share price, I gave this good because it's like going up perfectly. 2020, 252 kobo. So if you bought Fidelity Bank shares in 2020, now at the end of 2023, you are getting something like times four or times, close to times five of your investment. So in 2023 is like 10 naira 90 kobo at the end of 2023. But now the share price as at Friday was 9 naira 20 kobo. So it could go up again. So it's really good. It has been increasing each year. 2 naira 52 kobo, 2 naira 55 kobo, 2022, 4 naira 35 kobo, and 2023, 10 naira 90 kobo. So that's good. And the changes has been very fantastic. So over 100% between 2022 and 2023. So I'm giving it good for me. Then I also look at their assets and their equity. Their assets base has also been on the increase, in trillion naira from 12.7 trillion, 2.758 trillion to 3.28 trillion in 2021 to 3.989 trillion in 2022, then to 6.122 trillion in 2023. So it's good. So their liability also increased, but it's not up to their assets. So they have a positive shareholders fund. So they are not negative, which is good. So I'm giving them good. So they have assets. They are big. They are big. But we have some very big banks like Access Bank, over 24 trillion, like Zenith Bank, big bank, UBA bank, UBA. Okay, but yeah, so those ones they are still coming to the market. They might still need to come to the market, but they're still waiting for them as well. So for Fidelity Bank, they've taken the first step. So I believe they should enjoy that first mover advantage. Yeah, they came very fast. They are very fast. So their share price currently, as I said, yeah, is the share price is about nine naira 20 kobo, 9 naira 20 kobo as at Friday, 7th of June. Okay, so that's it. So their share price, yeah, I forecast to be like 11 naira 55 kobo at the end of 2024, and it could increase further. But optimistic scenario, it could go to 23 naira 18 kobo. Okay, so most likely it's going to increase, most likely from my analysis, because I can see more good trend than neutral trend. I did not even see any bad one that, oh, this is bad. No, I did not. So that's why I said, based on my analysis, it's a good for me. Okay, so if you really want to also take advantage of the little bank, you can also reach us on 080 627 85537. The number again, 080 627 85537 or 070 110 68621. Again, 070 110 68621. Okay, enjoy the analysis, but I want you to take advantage of this analysis and earn passive income for yourself. Okay, so thank you for listening. Just to show you one more slide. Source of our information is from the annual financial statement extract from Fidelity Bank. So we extracted the annual report and we got our figures for our analysis. So we got it from the source document. Okay, direct from the source document. So that's it. Contact us anyway. You need more clarity and you also know how to do analysis. You can also contact us. and watch our YouTube channel, subscribe, and share. Bye for now. Happy investing. Bye.